So our topic for today is on liquidity. Let me just type it down. Our topic for today is liquidity. I know a lot of you might have heard about liquidity. Liquidity, yeah. I know a lot of you might have heard about liquidity, and you already know what liquidity is, but you don't know what exactly it is in the forex market. Liquidity is simply money. Liquidity is people's money in form of stop loss. Do I need to type or do I need to type? I don't think I need to type. Let me just liquidity is simply is people's money. Let me just say is people's money. I typing might make the class longer. Liquidity is simply people's money in form of stop losses, stop loss, stop losses, um, buy stop, um, sell stop, TP, and many more. And many more, many more like um, FVG, your POI, they are all liquidity. When you buy, when you click on buy in the market, you are pumping liquidity. When you click on sell in the market, you are pumping liquidity. When your trade hits stop loss, you are liquidity. When you take TP, is liquidity. Anything that is happening in the market is liquidity. Is liquidity that moves the market. If there's no liquidity in the market will be very slow. You see that market will be very slow because a lot of people are not involved with the market at the moment. Liquidity is what market depend on to survive. That's just simply it. It's not something that is that. Just know that liquidity is money. When you buy, you are simply pumping liquidity. When you sell, you are pumping liquidity. When you sell, set buy stop. Um, let's say this place. Let's say you are trying to sell from around this place, and let's say you are trying to sell from around this place, and price is approaching your POI, and you already set buy limit. If price doesn't respect your buy limit and break above it, people that are trading breakout, they are already using their buy stop. Understand? People that are trading breakout, they are already using their buy stop. Immediately price break above it, they are already in the buy. You understand? Is also liquidity. Your buy limit became liquidity. If you respect your trade, is liquidity. If it doesn't respect your trade, still liquidity. People that are using buy stop, waiting for price to break resistance and go up, they are also liquidity. You understand? So that's just the simple definition I can give you. So let's just talk more on liquidity. Liquidity, liquidity now. We have different type of liquidity. Coming. Let me just silence this my phone. We have different type of liquidity, but the ones I normally use is the buy side liquidity. I use the sell side liquidity also. Then I use the dealing range. I use the external range liquidity, internal range liquidity. But the one I use mostly is just the buy side liquidity, sell side liquidity, and daily range liquidity, and then the last one, um, the inducement. The inducement should just be like the dealing range, should be like dealing range, or let me just say the buy side or the sell side. So the let me just write down the one I use most of the time. Buy side liquidity, the one I use mostly. I use the buy side. I was talking about buy side yesterday. Um, Liquidity. I use the sell side liquidity. I use the dealing range. dealing range. I'll define them and I'll show you example of what they are. I use which one again? I use most of the time I use the external and internal. The external and internal, they are just like our POI, external range, external range, and the internal range. They're just like the internal range is just like the POI within the dealing range. Outside the dealing range is the external liquidity. So I will explain them. Maybe when you are going through the video again, you can jot them down. But I'll just define them. You understand? I'll define them. Liquidity is simply money. Understand? When you put your stop loss for your trade, you are setting liquidity. That place is liquidity. When you put buy stop, when you open buy stop, when set buy stop, you are simply setting liquidity. Sell stop, liquidity, TP, liquidity, your sell limit is liquidity, your buy limit is liquidity. When you click on buy in the market, you are pumping liquidity. When you click on sell, you are pumping liquidity. Liquidity is simply money. So that's just it. So the buy side liquidity, which is this first one. Buy side liquidity simply means the liquidity that is found above market high. That was what I was saying yesterday. Like, let's say when you are trying to um look for sell direction, this side, you know, this was the last high before price took it out. So this place is the buy side liquidity. Liquidity, a buy side liquidity, I said it means liquidity that is found above market high. This place was the last high, you understand, the previous high. Then price did what? When price reversed back to this place, it took it out. So this place now, we can now call this place buy side liquidity. This place is buy side liquidity. Understand? This is the place you call buy side liquidity. This is your buy side liquidity. And for the sell side liquidity, it's something like this. Um, something like this. When price when price go below when price go below the previous low of the market, that's the sell side liquidity. This side is the sell side liquidity. I will explain both of them for you so you can understand. This is your sell side liquidity. So for this buy side liquidity, they are in form of like stop losses of people taking a sell position in the market or breakout orders. Let's say let's say in a bearish market now, let's say market was doing something like this before. Market was maybe going down like this, doing series of this, like moving like this, creating a lot of breakout to the downside. All this place like this. Let me use my brush. Let me look for brush. Where's brush? All this place here, this place, they are all liquidity. This place, they are all liquidity. You understand? When price wants to take them out later, it will come out, it will come up like this to sweep all of them. After sweeping them, maybe it will just come to this side, taking out this buy side. And whenever price take out the previous high of the market, what do you expect? You expect price to reverse. You expect price to do what? To start selling back. You understand? Because people that trade breakout now, they will there are a lot of people that trade breakout using they will just want to see markets break out of the previous high, and price may continue buying for a while. But in many cases, maybe on a bigger time frame, if price take out the previous high of every market, it will want to reverse. So the only way, yeah, you can follow this type of market is when you see the market giving you a change of character. Maybe after it broke above this, it start giving you something like this again, then reverse back down, then it's giving you something like this, then you can now sell. This is what this is what mostly happen when price take out the buy side liquidity. This is what mostly happen. The buy side liquidity creates reversal points, but most people that are trading breakout structure, most time it's like stop loss. Some people they will want to like trade like this, like on the higher time frame. On the higher time frame, some of people that trade a breakout, they just use lower time frame. They will want price to break out of this place. Maybe they will be waiting for retest for them to continue the buy. Most time it plays for them. That's for like lower time frame. That's if the market is very bullish on the higher time frame. That's when it play out. But if the market is not so bullish on the higher time frame and they are trying to trade breakout, most of the time they will stop loss. So that's the buy side liquidity. So according to the type of strategy we trade, type of strategy I trade in my channel, I use this buy side liquidity and sell side liquidity most of the time. When I see price giving me something like this and something like this in the market, I'll first wait for price to give me maybe a reversal to give me another liquidity, which will be my next buy side. After price give me something like this again, I'll wait again for price to create another structure like this. Then I know that it will sell. If you look at this one, if I move this one, if I move this one away from this one, are they not looking the same thing? Are they not looking at like I said buy side liquidity is simply the liquidity found above the the market high, the previous market high. You understand? They are in form of stop losses of people taking sell position in the market or breakout order. Understand? It creates a reversal point since this level accumulates liquidity for big boys to match their massive orders. Understand? If you look at this structure now, here, the first mark, this place that I first mark, this buy side liquidity, you can see that is also the same thing with this one. From yesterday now, I told you that if you are looking for sell, the structure you should look for is ABC structure, which I told you that you have something like this. You have something like this. Price giving you this, come down, then go back, take out the B, and giving you something like this. Understand? If I join this one and this one, are they not the same thing? They are the same thing. Now, this one is our B, this is our A, this is our C. You understand? But first of all, you need to know which one is the liquidity and where you need to take your trade. First of all, when you want to take trade, whenever you go to your chart and you want to look for anything, first of all, if you are looking for sell, you should see this buy side liquidity. You should see the buy side liquidity. If you see this buy side liquidity, what do you expect next? Is for price to go down. If it can break below this place for you, if price can break to this opposite direction, if price break to this opposite direction, then you expect a pullback. When price give you this pullback, it will come down to give you another area that you can say, okay, price will surely go and take it out to give you another structure that's looking like this. Let me move it away again so you can understand what I'm saying. Look at this now. First of all, you are looking for buy side. If price take out your buy side liquidity, if price take out the previous high in the market, what do you expect? People that are using buy stop, they will have entered immediately. They will think price will continue going. Understand? Which price will surely, after price take out buy side liquidity, after price take out the previous high here, price will surely want to reverse. That's one thing that usually happen. But for a few time, the people using buy stop, price may give them few pips, maybe like 100, 200 pips, then to start reversing. That's depending on the time frame that you are using. If you are using like smaller time frames, may give you like 30, 40 pips movement, then it will start reversing to take out this low here. Understand? If price give you something like this and it start reversing, giving you something like this, what do you expect? You expect price to give you pullback. This pullback will not be the next high around this place. Like this one will be the next buy side liquidity. And what do you expect price to do? Price to give you this pullback as liquidity again to come down. After price come down again, maybe to like, let's say after price gives you something like this, maybe it reverses to maybe around this place or around this place. Then you wait for price to come and do what? Take it out again. Then you continue the sell. People that are waiting for buy stop here, they will enter here and start buying. Before they know, price may tap into the POI around here, then start selling. The same thing for sell side liquidity. Sell side liquidity is simply is the opposite of buy side liquidity. It's just the opposite of buy side liquidity. Sell side liquidity is just um liquidity find below market low. This is it. It's liquidity find below market low. But most of the time, you'll be hearing people calling different name. I don't want you to just be putting different name in your head. That's why I don't want to start calling this liquidity, that liquidity, this liquidity. What you just need to know is just to look for, just know that, okay, this side is your buy side, this one is your sell side. If price take your buy side liquidity out, what you should expect is for price to reverse back to take out this low. After price take out this low, it should give you reversal point to come down, then reverse back, take out the buy side liquidity again, then start selling. Finish. You don't need to be saying this is the name of this liquidity, this is the name of this liquidity, that's the name of this. Like before now, I used to cram different name of liquidity, but this one they are helping me. They are the one helping me. I don't need to cram different name. You'll be hearing something like structural, something like inducement, or all those one. It's just too much. Understand? Just too much. You just need to know what is there. You don't need to be cramming big name. You understand? Like for this sell side also now, you should know that, okay, for sell side, price taking out the low, going below the low of the previous low, breaking below the previous low, is liquidity found below market low. They are in form of stop losses of people taking buy positions in the market or breakout orders. People that are already buying. Let's say I was buying here before, price was going up for me. Then I didn't close. Immediately price come take me out. After it take me out, it has taken me out of stop loss. My stop loss is liquidity. And people that are trying to use sell stop here, they will already be in the market. When market continue going down, immediately price reverse, that it will take them out too. Understand? Their own sell stop too is also liquidity. Anywhere you are in the market, you are liquidity. If you are in profit, you are liquidity. If you are in loss, you are liquidity. You understand? If you take profit, that's liquidity. If you move money from the market, is liquidity. If you give money to the market, is liquidity. You understand? It's not something you just complicate. So now, what do you expect after price give you sell side liquidity? You expect price to come down after breaking above this high. You expect price to do what? Come down to give you another sell side liquidity, going back up or around this place, come down to take out, creating the same structure as this. If you look at this now, this is also sell side liquidity. It's just continuously. Price will be creating such structure unless price now do something like this. Unless price do something like this later. Understand? Unless price do something like this, that's when you now say, okay, there's a change of character already. That means this place now is no more valid for you to buy. You are now looking for sell. Then you'll be looking for what? Things like this. Price has changed from buying to selling. You understand? then this place will not be your new buy side liquidity. Buy side liquidity. You see, is not something that is hard. You just need to be able to get the concept. If I'm just saying, if I start mentioning different name now, you'll be confused. I just want to use buy side and sell side liquidity for you so you can get it. I don't want to start measuring this place is structural liquidity, this place is investment liquidity, this place is structural liquidity, this place is transactional liquidity. I don't want to mention all those ones. You will start learning different definitions. It will be too much for you. I just want you to know that if price give you something like this buy side liquidity, what do you expect after price take out the previous high of the market? You expect price to do what? Reversal. You understand? It's just like price inducing it. Then after price induce it, it give you reversal. After the reversal happened, it will go back up to give you another area for liquidity. After this one has been given, it will go price will go back up to take out the buy side again, forming the same structure, then selling. Now, also for the sell side, if price, people that are buying from here, price going back, going up before, then come out, take them out. Maybe they have cleared their stop loss. You already know that that's the sell side liquidity. People that's doing putting sell stop, that's triggered them, they are already in profit going down. Then price reverse, changing character. Then later it will do what? Give us another pullback as liquidity. Then the next thing is price reversing, taking out this sell side liquidity, tapping into a good zone here, then start buying. Understand? So that's it. Now we already have another buy side liquidity created. The next thing we are waiting for is for price to do what? Give us pullback, reverse back up, come down to around this place, then go up. But if price didn't give us a good pullback, let's say price didn't give us something like this, that means price will surely come and take out this place. It will clear this place. Then that's when you now know that price has changed character from buying to selling. Now, if price do something like this, maybe it didn't give us a good pullback. If price didn't give you this pullback like this before coming back to the zone that you mark here, that means this whole zone here is no more valid. They are now liquidity. It's no more valid. Price will take them out. After price take them out, then you know that this place now has become change of character. Or let's say market structure shifts. Let me just say MSS, market structure shifts. Then you now mark this place as your what? Buy side liquidity. Is now the current buy side liquidity. You understand? That would now become the current buy side liquidity. Then this one will now become your B, which you know that price will surely come and take out. You understand? Then if you look at this now, is it not looking like this? Like from around this place to this one, they are looking at like if price is buying before, if price is respecting this buy, you know, after price created this structure here, price will reverse into this zone. Maybe before it reverse to give us liquidity first, then reverse into this zone, tap into this zone, start buying. When you start buying, we already know that okay, the next zone should be here. What are we waiting for? We are waiting for price to give us a pullback, give us another push to the upside to give us a good liquidity. If price give us a good liquidity, then price will surely reverse back to this zone. Then this zone is the strong zone now, the strong zone that we will need. Then price will reverse back to this place, then continue the buy. But if price didn't give us a good pullback, then price will come and take out this low. Then when price take out this low that is here, then we know that price has changed structure from buying to selling. You understand now? It's not supposed to be hard. It's not something that is hard. Buy side liquidity, I said buy side liquidity, there are liquidity found above market high. You understand? And sell side liquidity, there are liquidity found below market lows. So that's it. Let me show you an example on the chart. This chart will be scattered now. Let me use maybe 1 hour time frame. You see this now. This buy side liquidity. Immediately price took out this high. What happened? It sell. It sold. Buy side liquidity. What did I say about buy side liquidity? They create a reversal point. I said they create a reversal point. If you can find a trading model that will align with this, it will be very good. It will help a lot. But as time goes on, I'll show you everything that you need to know. But the only thing is that I want you to know that liquidity is not something that is hard. Not something that is hard. You just need to to understand the basic one. You don't need to cram plenty names on your head. And like this one now, we have this side, this buy side liquidity. What happened after this buy side liquidity? Price reverse back here to give us B. Understand? Then later, price after price started doing all this thing, later it came out, take out this place. After taking it out, it started selling. You can see it sold for a long time. If you look for buy side also, they are also the same thing. Buy side liquidity, price take out the low. After price take out the low, it will buy. Understand? They are just used for like reversal. They are used for reversal. That's what liquidity does. Let me say in a trending market now. Let's say you are in a trending market. Let's say you are doing you are in an uptrend. Understand? You are in an uptrend. Price is giving you a series of higher highs, higher lows. Understand? Price will not continue like that. Price will surely come out to take out one low first. After I take out one low, it will go back up, then come back, give you another low around this place. Come down, take out this low, then tap it again, go up. Understand? Price will continue doing that. Do this again, take out this low again. Understand? So it will keep creating series of um lows lows within the what's it called, the trend, and those lows that the price is creating is on the lower time frame. But people that are trading the lower time frame, they will not know. They will just think this place is okay for me to buy, is a good pullback. Before you know, on the higher time frame, that place is just liquidity that price wants to take out. You that you are using the lower time frame, price will just take you out. You feel like you are doing nonsense. You are not doing nonsense. You just didn't like check it well on the higher time frame. If you use like 4 hours, 1 hour to mark your zones to look for where the buy side and sell side liquidity are, you will know what you are doing, that you will not be taking a lot of losses. Understand? You will not be taking a lot of losses. Let me go to the next one. I was talking about, I've talked about the buy side and the sell side. I want to talk about the which one? I want to talk about the dealing range. This dealing range is just simply um the area between an established swing high and established swing low. I already talked about this one yesterday. It's just like using your Fibonacci. Let's say you have something like this in the market. Let's say market was giving you something like this. Um, After price take out this low, then go up like this, give you something like this. I'm coming. Let's say this price was selling before. Understand? It was selling before. Then price did what? Take out this low, giving us what? Sell side liquidity. But we are not talking about sell side liquidity again. I'm talking on dealing range liquidity now. Dealing range liquidity, I said, is basically the area between an established swing high and an established swing low. I already talked to you about swing points already when I was talking about basic market structure. I understand. I told you what your swing is. If you look at this whole thing, this thing I draw now, where's your recent swing? Is from year to year. What I mean by dealing range is that this zone here is liquidity. This place also is also liquidity. But if you look at this whole thing now, which one will you prefer? Which place will you like prefer to take your trade from? In the whole of this liquidity, all these places they are all liquidity. This dealing range, they are liquidity. I said dealing range is the area between an established swing high and an established swing low. Understand? Now, if you look at this whole thing, price gave us a sell side liquidity here, and it gave us a break to the upside. Now it's pointing towards that price is buying. So now, if you are to trade from the premium area, let me take my this zone here. This area is premium, and this area is discount. Now, if you are to take any trade around this place, you should be interested in taking trade within the discount area here. Any liquidity within the discount area. Your POI such as FVG, order block, field order block, any name you can call it, they are all liquidity. But the one that you are mostly interested in is the one around this region. You understand? Is the one around this region. In this swing point now, this is your what's it called? This area is your what's it called? Is the dealing range high. This this area is dealing range high. This area you should call it dealing range high. I don't want to be calling different name, so you will not get confused. That's dealing range high, and the area below here is the dealing range low, because I said dealing range um the is the area between an established swing high and an established swing low. Understand? This area here is the dealing range high, and this place is dealing range low. So after price do something like this, maybe price come into any of our liquidity area here, maybe FVG, which is the most important and powerful POI to use. Maybe price come to this FVG and start buying again, The next dealing range should be from year to year. You understand? The next dealing range is from year to year. That's it. If you want to mark the next dealing range, the next place that you want to use as liquidity in the market that you'll be interested in to mark your dealing range, your high and low, is from there to there. It's just like what I was teaching yesterday, what I was teaching about Fibonacci. It's just the same thing. It's just that when we get to liquidity, we just have to use like different words to define them. You understand? It's not something that is that. If you just use, if I say I want to put in a simple term now, it might I might maybe confuse you more. So I just want to use this dealing range to explain to you. This dealing range is just the area you are interested in. Any area you are interested in the market, any area you're interested in the market, they are all liquidity. That's just it. Any area, if you are selling, it's liquidity. If you are buying, it's liquidity. Any area you are interested in is all liquidity. You understand? So that's dealing range for you. Dealing range liquidity. So the next one is the external liquidity and the internal liquidity. The external liquidity is just like saying the highs and low of an active dealing range. They are known as the external liquidity. Like this dealing range that I draw now for you. This dealing range I draw for you now. Let me delete this. If price tap into this zone and go above this place, this area, anything that happen around this place, outside this place, is external range liquidity. Anything that happen below this place also is external range liquidity. If maybe price didn't respect this sell, this buy around this place, and it break below this place, that's external. Price has gone up, it has gone out. This place is now external. This place is also external. Now, anything that is happening within this whole place is internal range liquidity. Anything that is happening within the dealing range is internal range liquidity. Anything that is happening outside the dealing range is the external liquidity. Understand? So I don't want you to get plenty things to your head. Just what you need to know is just this structure. You need to know this buy side, sell side, and this dealing range. That's all. Those are the things you need. So that's it. And if you have any question, you can ask before we I stop. Let me say I will pause the class. I'll pause the maybe what I was recording. I'll pause it. Then I can answer your question. Let me explain this delay range again. This delay range is the area between the established high and an established low. You understand this area? Let's say the internal range liquidity. They are the area within the high and low of the market. You understand? Now you are interested in this area, but which one are you more interested in when you are buying? You are interested in the one in the discount area. Now, any institutional reference point within this discount area, let me say either you are you are marking your FVG, um, order block, um, failed failed order block, mitigated block, any name you can give it, any POI that you know, the one you are interested in should be the one in the discount area. You understand? The one you are interested in should be in discount area. If I can get an example, let me just look for an example. How will I get an example? Yeah. Should I use another pair? Just looking off because it's lower time frame. Let me put on 4 hour time frame. I'm coming. I will answer your question. Someone was raising this and um which one should I use? And has played out. I'm not seeing a good structure. Okay, let me say from here. Let me say the whole thing that happened from here to here is my dealing range. If I want to take any trade now, I'll use my Fibonacci. I'll use my Fib to mark from here to here. Where will I be interested in taking my trade from? I'll take my trade from the 50% area here. But I will need to know which POI is more important. You understand? Looking at these whole places now, I'm not seeing any good POI here. The only good POI around this place is this other block here. The remaining POI has been mitigated while the price was going down. So this is the only one that is looking good. Understand? Which is in the premium area. If you are selling, you should be interested in the premium area. Understand? It's just like now, this whole place from here to here is my dealing range. From within this place is my daily range. Now, anything that happen outside this place, if price later take out this low now that is here, that means it's external dealing range. Assuming price now reverse back up, maybe as it was going, it didn't respect this place, it took out this place. That means anything that is happening around here is external. Anything that is happening here is external. Anything that is happening within this place is internal. You understand? So this is the dealing range. Understand? It's just like swing points. You understand? It's not something that is hard. So that's what I was trying to explain to you. That's what I was trying to explain to you. Um, so I can like stop the recording. Same someone wanted to ask question. Let me stop the recording so the video will not be too long. My laptop is low. I didn't charge it.